Right now, three multi-billion-dollar sectors of the digital economy are colliding: cross-chain messaging, decentralized data infrastructure, and artificial intelligence. For the last several years, the infrastructure bridging these sectors has been dominated by a few major players. Chainlink holds a firm grip on the institutional, decentralized finance market, while Pyth Network controls high-frequency data pools for rapid-fire trading. Flare enters this landscape with a highly distinct architecture. Instead of operating as a third-party plugin that sits between networks, Flare is a sovereign Layer 1, an independent base blockchain. Its goal is to act as the foundational data integrity layer for the next iteration of digital infrastructure. This split-screen chart tracks the massive disparity in fully diluted valuation between Chainlink and Flare. Analysts estimate that for Flare to reach parity, its token holds an upside potential of 1.7x to 3.3x, revealing severe market undervaluation. That valuation gap creates an interesting tension. Flare boasts an elite team of academic founders and has already proven it can migrate massive amounts of dormant liquidity from legacy networks like XRP into active decentralized finance protocols. However, that potential is weighed down by a problematic track record. The team has a history of severe timeline delays, and their upcoming roadmap pivots into verifiable AI, an incredibly complex technological leap that introduces entirely new vectors of risk. This creates a difficult dilemma for anyone allocating capital. You have to decide if Flare is a sleeping giant quietly building a superior data network, or an overly ambitious academic experiment carrying too much execution risk for a safe portfolio. To understand the technological trade-off at play, we need to look at how blockchains traditionally ingest external data. By design, blockchains are isolated networks. They cannot natively see the outside world. Chainlink solves this using a push-based model. It acts as a specialized middleman, relying on independent, off-chain node operators to gather data and push it onto the target blockchain, so smart contracts can read it. This side-by-side comparison shows Flare's radical alternative, enshrined data. On the left is the traditional third-party plugin model. On the right, you see Flare's architecture, where the data-gathering protocols are fused directly into the network's core consensus layer. Look at the exact mechanism on the right. The validator nodes mathematically securing the blockchain are the exact same entities providing the external data. There is no middleman. By eliminating the third-party hop, Flare achieves extreme speed. It delivers sub-2-second block latency data updates natively on-chain. And because the network inflation subsidizes the data providers, querying this high-fidelity data is completely free for any decentralized application built natively on the network. But here is the massive trade-off. To get that fast, free data, developers cannot simply plug Flare into their preferred existing networks like Ethereum or Solana. They are forced to build their entire application directly on Flare. Flare possesses an undeniable architectural moat. However, requiring developers to operate within a closed ecosystem introduces a severe ghost town risk. If the network cannot pull sticky, persistent developer activity away from established giants, its technical superiority will not matter. The success of that architecture relies entirely on the humans building it. The founding team shares deep academic roots at University College London. CEO Hugo Fillion and CPO Sean Rowan hold master's degrees in machine learning, while chief scientist Dr. Nayeri Usher holds a PhD in quantum computing. They possess an elite, highly specialized technical pedigree. The dangerous downside to that academic perfectionism is a documented failure to hit deadlines. Historically, the team struggled with severe delays, missing their initial mainnet and beta launch targets by up to 2 years. Recently, however, their execution has drastically improved. Over the past year, the team successfully launched their highly complex F-Asset system on the mainnet, which allows non-smart contract tokens to be used securely in decentralized finance. Partnering with external wallets to create a one-click DeFi pipeline, this deployment successfully captured over 107 million dormant XRP tokens, redirecting real value into the ecosystem. They also executed a critical structure shift exactly on schedule. In January 2026, the 36-month Flare drop, a persistent token distribution event that created heavy monthly sell pressure, officially concluded, abruptly capping the supply shock. While their history of delays demands immense patience, the recent delivery of the F-Asset system and the stabilization of their tokenomics prove this team can successfully translate lofty academic theory into working infrastructure. That execution capability will be tested by the Q3 2026 roadmap, a major technological upgrade enabling the network to perform secure, hardware-isolated computations. This phase is known as Flare 2.0, and it hinges entirely on the integration of Trusted Execution Environments, or TEEs. This phase is known as Flare 2.0, and it hinges entirely on the integration of Trusted Execution Environments, or TEEs. This diagram illustrates a trusted execution environment. It is a secure, hardware-isolated computing space designed to protect memory and shield sensitive data from the rest of the parent operating system. In the Flare 2.0 model, high-integrity data streams from the network's native oracles flow directly into this isolated armored core. The core processes that data and generates a cryptographic lock, a mathematical proof verifying that an artificial intelligence model executed correctly without ever exposing the raw private data inside. This specific capability positions Flare to be the first-mover foundational layer for data-intensive, privacy-centric AI applications running on a blockchain. The industry is taking this direction seriously. In February 2025, Google officially teamed up with Flare to co-host a verifiable AI hackathon to test the limits of this technology. But this pivot introduces an unprecedented trade-off. Relying so heavily on physical TEE hardware creates a centralized vulnerability. If a major chip manufacturer experiences a real-world hardware-level exploit, it could theoretically compromise the private keys managing billions in cross-chain assets. Flare 2.0 is an incredibly high-risk architectural bet. It brings on-chain AI capabilities to the market, but it absolutely requires trusting physical hardware manufacturers to secure decentralized value. Let's rule out conservative allocators immediately. If your portfolio prioritizes first-mover advantage, institutional adoption, and predictable corporate roadmaps, do not buy Flare. You should stick with Chainlink. This decision tree maps out the framework for investors with a higher risk tolerance. We divide this into two specific profiles. The value allocator path is a purely structural, math-driven play. This investor is allocating based on the fact that the 36-month token dump has concluded, and the network's fully diluted valuation sits at a historic low compared to its competitors. The narrative speculator path focuses entirely on the massive upside of the technology. This investor is betting the team can successfully bring $1 trillion in legacy assets into the DeFi ecosystem and successfully execute the verifiable AI hardware roadmap. Both profiles must carefully monitor the upcoming Q3 2026 upgrade timeline, because despite their recent wins, the team's historical habit of missing major deadlines remains the ultimate wildcard for your investment. Flare is not a safe blue-chip infrastructure play. It is a technically superior dark horse offering massive upside, strictly for investors willing to stomach extreme execution and hardware risks.